Cluster Accountancy Numerical Problem Solutions, presented by eduxir.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Guarantee of Profit to the Partners Solutions, Problem 29 Solution. The problem statement is as follows. Pinki, Deepti and Kaku are partners sharing profits in the ratio of 5:4:1. Kaku is given a guarantee that his share of profits in any given year would not be less than 5,000 rupees. Deficiency, if any, would be borne by Pinki and Deepti equally. Profits for the year amounted to 40,000 rupees. Record the necessary journal entries in the books of the firm showing the distribution of profit. So, as per the problem, we have to record the necessary journal entries showing the distribution of profits. As we are dealing with the distribution of profits, it makes sense to prepare the profit and loss appropriation account also. If you carefully analyze the problem, we notice that this problem is just about the distribution of the profits, nothing else. It is given in the problem that the net profit for the given year is amounted to 40,000 rupees. Now, we know that the net profit is nothing but a credit balance in the profit and loss account. For distributing this net profit, we prepare the profit and loss appropriation account. So, we need to transfer this net profit on the credit side of the profit and loss appropriation account. Also, as we are transferring this net profit from the profit and loss account, we need to debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let's leave out the profit and loss account related debit entry and let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But first, let's prepare the format of the profit and loss appropriation account as it is not yet prepared. Let's first write the title as profit and loss appropriation account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for particulars and amount in rupees on the debit side. Let's have the same columns on the credit side also. Let's then write by profit and loss account into the particulars column on the credit side. This indicates that the net profit is transferred from the profit and loss account to the profit and loss appropriation account. Let's then write the transferred net profit amount of 40,000 rupees into the amount column. With that, we have completed the credit entry related to the transfer of the net profit from the profit and loss account into the profit and loss appropriation account. Now, as we have already discussed, this problem is totally about distributing the net profit to the partners. So, there will not be any other entry in the profit and loss appropriation account. And we can directly jump to the distribution of the net profit among the partners. Also, it is given in the problem that the partners shared their profit in the ratio 5:4:1. Let's now calculate the share of the net profit for each partner as per this ratio. Before we proceed with the calculation, there is one thing worth noticing here. It is given that the partner Kaku is to get a minimum amount of 5,000 rupees as his share of profit. He should not get less than this amount. It can be more than 5,000 rupees, but it should not be less than 5,000 rupees. It is also given that Kaku's share in profit is guaranteed by the other two partners, Pinki and Deepti. And if there is any deficiency, it would be borne by the other two partners, Pinki and Deepti, equally. I repeat, this deficiency is borne by the other two partners equally. So, in the working notes section, let's first write the header profit sharing to indicate that the upcoming calculation is related to the sharing of the profit among the partners. Now, let us also have a subheader to calculate the profit as per the profit sharing ratio. Now, the profit share of the partner Pinki is equal to the total net profit amount of 40,000 rupees multiplied with her profit sharing ratio 5/10. Let us cancel the 0 in 10 for a 0 in 40,000 rupees. Now, if we multiply the remaining 4,000 rupees and 5, we get 20,000 rupees. This is the share of profit for the partner Pinki. Now, the profit share of the partner Deepti is equal to the total net profit amount of 40,000 rupees multiplied with her profit sharing ratio 4/10. Let's cancel the 0 in 10 for a 0 in 40,000 rupees. Now, if we multiply the remaining 4000 rupees and 4, we get 16,000 rupees. This is the share of profit for the partner Deepti. Now, the profit share of the partner Kaku is equal to the total net profit amount of 40,000 rupees multiplied with his profit sharing ratio 1 upon 10. Let's cancel the 0 in 10 for a 0 in 40,000 rupees. The resulting value of this calculation is 4,000 rupees. This is the share of the profit for the partner Kaku. But it's given in the problem that the partner Kaku should get a guaranteed profit amount of 5,000 rupees. But as per the profit sharing ratio, we are getting his share of profit as 4,000 rupees. Now, this 4,000 rupees is less than 5,000 rupees, right? So, we need to find the difference and adjust it from the share of profit of other partners. In other words, we will reduce the other partner's share of profit and adjust that amount to Kaku's share of profit so that Kaku would get the guaranteed profit amount of 5,000 rupees. By the way, we call this difference in the profit share amount as deficiency. So, the deficiency of Kaku's profit share is his guaranteed profit amount of 5,000 rupees minus his calculated profit share as per the profit sharing ratio, which is 4,000 rupees. Subtracting, we get 1,000 rupees. So, this deficiency should be adjusted from other partner's profit amount. Also, it is given in the problem that this deficiency should be borne by the other two partners, Pinki and Deepti, equally or in the ratio of 1:1. Now, the contribution made by each of the partners is equal to the deficiency amount of 1000 rupees multiplied with the deficiency sharing ratio 1 upon 2. Now, cancelling with 2, 2 ones are 2 500s are. The resulting value of this calculation is 500 rupees. This is the contribution by both the partners, Pinki and Deepti, to the deficiency in the partner Kaku's profit amount. Considering these contributions, let us now find how much is the actual profit share of each of the partners. Now, the actual profit share of the partner Pinki is equal to her share of profit as per the profit sharing ratio, which is 20,000 rupees, minus her contribution to the deficiency in partner Kaku's profit share, which is equal to 500 rupees. Subtracting, we get 19,500 rupees. Now, the actual profit share of the partner Deepti is equal to her share of profit as per the profit sharing ratio, which is 16,000 rupees, minus her contribution to the deficiency in partner Kaku's profit share, which is equal to 500 rupees. Subtracting, we get 15,500 rupees. And finally, the share of profit of the partner Kaku will be equal to his guaranteed profit amount of 5,000 rupees. Now, for distributing the profit, we transfer the profit amount from the profit and loss appropriation account to the partner's capital account for each partner individually. In other words, there is a decrease in the profit amount available in the profit and loss appropriation account. So, we should debit the profit and loss appropriation account. At the same time, as we are adding this profit share to each partner's capital account, the partner's capitals are increasing. So, we should create the partner's capital account for each partner. Now, as it is asked in the problem, we have to prepare the journal entries to show the distribution of profits. See, there are two ways in which we can record these transactions in the journal. In the first method, we record the entire transaction as a single compound entry. In other words, we record the actual profit share of each of the partners. So, let us have the journal format to journalize these transactions. Let's first write profit and loss appropriation account as the debit entry. Let's also write the text DR to indicate that this is a debit entry. Let's then write the debit amount of 40,000 rupees in the debit amount column. Leaving a margin, let's record the credit entry for the partner Pinki's capital account. If you remember, the credit entries in the journal start with 2. Let us then record the corresponding credit amount of 19,500 rupees for the partner Pinki. Let us then write to Deepti's capital account to show the credit entry for the partner Deepti. Let us then record the corresponding credit amount of 15,500 rupees in the credit amount column. Let us then write to Kaku's capital account to show the credit entry for the partner Kaku. Let us then write the corresponding credit amount of 5,000 rupees in the credit amount column. Let us then write the description or narration of this transaction as being profit distributed among the partners. With that, we have completed the generalizing of single component entry for the distribution of the profits. Now, there is a second way of recording this transaction related to the distribution of profits. Here, we first record the transfer of the net profit for each partner as per their profit sharing ratio. In this case also, we should debit the profit and loss appropriation account and credit the partner's capital account for each partner. So, let's first write the heading to indicate that we are going to record separate entries for the share of profit and deficiency separately. Let's then have the journal format. Now, for transferring the net profit, the debit entry is in the profit and loss appropriation account. Let's then write the text DR to indicate that this is a debit entry. Let's then write the corresponding debit amount of 40,000 rupees in the debit amount column. Let's then write the first credit entry into the partner Pinky's capital account. Let's then write the corresponding credit amount of 20,000 rupees in the credit amount column. Note here that this is the profit share amount calculated as per the profit sharing ratio. It is not the actual profit. Let's then write the second credit entry into the partner Deepti's capital account. Let's then write the corresponding credit amount of 16,000 rupees into the credit amount column. Let's then write the third credit entry into the partner Kaku's capital account. Let's then write the corresponding credit amount of 4,000 rupees into the credit amount column. Note here that this is not a guaranteed profit amount. It is the profit share amount calculated as per his profit sharing ratio. Let's then write the description or narration of this transaction as being profit distributed among partners as per their profit sharing ratio. Now, the next step would be to record the entries related to the adjustment for the deficiencies. See, as both the partners Pinki and Deepti are giving away part of their profit share to contribute to the partner Kaku's guaranteed profit amount, their capitals will be reducing. See, we have already added the profit share to the capital accounts. So, their profit is now part of their capital accounts. That's why I'm saying that their capitals will be reducing. So, as their capital accounts are decreasing, we should debit both Pinky's capital account as well as Deepti's capital account. At the same time, the capitals reduced from the partners Pinky and Deepti's capital accounts are added to the partner Kaku's capital account. In other words, partner Kaku's capital amount is increasing. So, we should create the partner Kaku's capital account. Let's now proceed with the generalizing of this transaction. Let's first write partner Pinky's capital account as the debit entry. Let's then write the text DR to indicate that this is a debit entry. Let's then write the corresponding debit amount of 500 rupees in the debit amount column. Let's then write partner Deepti's capital account as the next debit entry. Let's then write the text DR to indicate that this is also a debit entry. Let's then write the corresponding debit amount of 500 rupees into the debit amount column. Leaving a margin, let's write partner Kaku's capital account as the credit entry. Let's then write the corresponding credit amount of 1000 rupees into the credit amount column. Let's then write the description or narration of this transaction as being deficiency in Kaku's profit contributed by the other partners Pinky and Deepti. Now, the preparation of the partner's capital account is not in the scope of this problem. So, let's leave out the partner's capital account related entries and let's directly post the profit and loss appropriation account related entries into the profit and loss appropriation account. Let us first write the subheader profit transferred in the particulars column on the debit side. Let's then write to Pinky's capital account. Let's then write partner Pinky's share in profit calculated as per the profit sharing ratio, which is 20,000 rupees. From this, let us lessen her contribution to the partner Kaku's profit share deficiency from guaranteed amount. This is 500 rupees. Now, from 20,000, if we subtract 500 rupees, we get 19,500 rupees. Let's write this amount in the amount column. Let's then write to Deepti's capital account. Let's then write partner Deepti's share in profit calculated as per the profit sharing ratio, which is 16,000 rupees. From this, let us lessen her contribution to the partner Kaku's profit share deficiency from guaranteed amount. This is 500 rupees. Now, from 16,000, if we subtract 500 rupees, we get 15,500 rupees. Let's write this amount in the amount column. Let's then write to Kaku's capital account. Let's then write partner Kaku's share in profit calculated as per the profit sharing ratio, which is 4,000 rupees. To this, Let's add the deficiencies received from the other partners. Now, the contribution to this deficiency by the partner Pinki is 500 rupees. The contribution to this deficiency by the partner Deepti is 500 rupees. Now, to 4000 rupees, if we add both the 500 rupees, we get 5000 rupees. Let's write this in the amount column. Now, the total on the debit side of the profit and loss appropriation account is 40,000 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is also 40,000 rupees. So, the profit and loss appropriation account is balanced. With that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.